Hey, what's up, everybody? Good morning. It is Pete. Welcome to Stocks for Breakfast. It is Wednesday, March 11th, 2020. I have no idea why that surprises me every morning. I have to look to see what day it is. I'm a little tired this morning because I got back late from traveling. You can see the whiteboard in the background. I'm back home. Today, we're going to talk about whether or not you should continue to buy after yesterday's advance, despite the fact that the market is actually down 600 points as of right now, roughly 6:30 in the morning. So we're going to look at a couple of different scenarios, but first we got a couple of good emails, one specifically from Shauna last night in reference to yesterday's video and whether or not you should have gotten long early when the market actually bounced. If you remember that, here's really the point that I want to make, and this is the point to drive home. The single biggest point yesterday, the single biggest part of trading strategy that you should be focusing on from yesterday was the fact that we said don't buy a higher opening. That is by far the single biggest thing, because I keep saying this over and over again, is your trade management. If you have a solid trading plan, if you have a really good sense of how to read the tape. And again, my whole goal is to help you go from chart reader to tape reader. Chart readers generally struggle and fail because they're just looking at what's going on. Tape readers actually figure out what's going on and how do I make money from it? How do I actually manage a position? So what I walked you through yesterday was I said this says, okay, this is awesome that we're opening higher, but the probability of everything that's going on prior to that move open says that not to buy this higher opening and actually wait for the market to pull back and or pause. Now, I was very specific yesterday where we did an example in the SPY ETF, and I had said that if we open up above the SPY and pull back, yesterday's high would be the spot where we'd be looking to bid. So I want to walk through two different scenarios so you get a good feel, so you can carry that through into every single day based on the scenarios that as we discussed them yesterday. And here's a context. That's the best way to word it. Here's the context for that. As stocks start to climb, and as they have regular good order flow or don't. Right now, we don't have bullish order flow, so that lowers the argument for wanting to be long. So again, big gap higher, right? But not a lot of previous recent history of buying. So that's the key here. That's the difference between chart reading and being a tape reader. Not a lot of price history behind it, especially the recent price history and the severity of the bearish news that's out right now caused me to be a little bit more cautious. Isn't the right word, as much as not over exuberant to buy the monster move up pre-market, because the most recent price action did not call for that, meaning there wasn't recent buying. I want to show you two examples. We're going to talk about the SPY and we're going to show Apple. And I think something that's super important is I don't cherry pick opportunities and say this one worked and that one worked and this one worked, and everything looks like we live in the Wizard of Oz. That's not the case. So I want to show you why the trade in the SPY did not trigger yesterday, despite opening higher and being at the previous day's high. And then we're going to take a quick look at Apple. But before we do that, I want to show you, just to give you an idea of how crazy the market was back during the financial crisis. We're going to take a look at the VIX indicator, the VIX, which is many people call the fear indicator. Right now, things are pretty out there, right? Like we've discussed how big volatility has changed the average true ranges and how you have to adjust your share size and your stop loss and everything. We're about half of what it was during the 2008 crisis. That's how wild the 2008 crisis is. So actually, we're going to share the screen. We're going to show a couple of examples, and then we're going to go into looking for some opportunities today. So this is a monthly chart. You can see the VIX up here, a monthly chart of the VIX. I remember this super, super clear. The VIX got up to 95 and change, I think maybe even like 96 or something like that. That's how bananas the market was back then when we were heading down. So if you don't use the VIX, I'll give you a super short lesson here. Basically, the way, again, I'm not going to get into the technicalities of the VIX as much as how to actually use the VIX. As the VIX goes higher, volatility expands because it's implied that fear expands. So premiums have to go higher on options because of the increased volatility. So the way you use it as a trader is as the VIX goes higher, you can expect those average true ranges to expand. So you have a higher profit potential, but wider swings. So you're going to have to adjust your share size to compensate for the higher swings. And again, super advanced stuff here, but it just makes sense because if the market's swinging wider, you can risk that same, $300, for example. You just change your share size because the stop loss is wider. A different way to use the VIX, and I'm actually going to bring this all the way down into a 5-minute chart, and we're going to use this window here. Now, whether you use moving averages or not, completely up to you. You could even just go all the way down to even just using an hourly chart to get the same example. So in other words, if this hourly candlestick is red or green, but I'm going to use the 5-minute here just to make things pretty clear. So what you want to use the VIX as during the day, you could use the VIX or the trend. They basically work the same way. We're not going to get into the trend today, but if the VIX is trending higher, the best opportunities are to be looking for short sales in that time frame. If the VIX is trending lower, the best opportunities are to look for buying because fear is coming out of the market and you expect people to be jumping back in, premium shrink, and bullish nature goes on. So you can see from 2 o'clock yesterday afternoon, 1400, 2 o'clock, all the way down into the close, the VIX was in a very, very solid downtrend and bullish opportunities happen. Now, you can also draw support and resistance lines in the VIX just to see where it would have stopped. So this spot right here at roughly 240, when the VIX broke down from the support level, that would have been the best opportunity in the afternoon to get long. Excuse me, that was 2 days ago. Oh, no, that was yesterday. Yeah, it's 24 hours. And this is what's going on in the VIX today. So that's yesterday in the VIX. But what I want to compare that to is where you can see from 2 o'clock to 240, and then 240 especially when it broke down. If we take a look at the SPY on the 15-minute chart, actually no, let's stick with the 5. You can see here's 2 o'clock, kind of like in the middle of nowhere. The VIX fell down, but again, right here, the SPY broke out as the same time that the VIX broke that support. So I want to come back to the screen here just for a second. Every single day, I'm talking about building an argument for a trade, and this is where conviction comes in as a trader. This is where confidence comes in as a trader. If you're just buying because of one thing, or if you're just selling because of one thing, that's not a good argument. You're not building a good case for accepting risk. You're not building a good case for holding on to a trade. We just even only used 2 things. We said the VIX had support. It was trending down for 40 minutes from 2 o'clock to 240, but it was still in that trading range. So nothing to get excited about yet, despite the fact that the market was bouncing a little bit. But then the VIX broke support at the same time that we got a big fuel candlestick, and I'll get back to what that looks like on the chart in a second. So 2 pieces to the argument just got added there. Even just 2 pieces is better than just saying I want to get long or short for whatever reason. So again, thinking it through the mindset, I don't want to give you trades. I want you to be able to, like, some people do, but I want you to be able to say, I can take money out of the market because I know how to build an argument. I understand how to read the order flow. I understand how to read the tape. And that's where the ultimate confidence comes from when you're looking at the market and you say, it doesn't matter what the market's doing. I know what I'm supposed to be looking for. XYZ is my edge. If I see that and a whole bunch of things line up, then I'm going to take the trade with full confidence and let my edge work over time. If I'm only trading on one thing, it just broke out and I want to be long, that's not a great argument. So at least in your head, start saying, is this a good argument? Does the risk justify the profit potential, and why? Why does it justify the profit potential? That's what it means to build an argument. So I'm just gonna go right back to that chart again. We'll take a look at a couple more, and you can see here this fuel candlestick. Fuel I'm usually associating with stocks where you see big volume coming out of a trading range, but it's not a coincidence, and that's actually the way it works. So what's kind of interesting here too, if you really want to take this to another level, then when the market gets up here to the highs or to the lows, so for example, we'll just use the Qs as an example. In this area here, you want to see now, you can even add more to the argument, was the NASDAQ doing the same thing? Was the Dow doing the same thing? And all 3 indices were doing the same thing at the same time, adding to the argument even more. It's not necessarily sector rotation, but it's a lot more money doing the same exact thing. So I want to briefly jump into 2 stocks. I want to talk about the SPY, or two situations. So you can see we have the SPY ETF here on the 15-minute chart. So this is Tuesday and this is Wednesday. So this is yesterday's price action, right? So in the meeting yesterday morning, we're going to start calling these stocks for breakfast meetings because now we're buddies in the morning. You can see that we opened higher. So right out of the gate, I said, don't buy the higher opening. The odds of it going higher on this higher opening are slim. That doesn't mean we can't be a buyer. Then we said we're going to actually set up a scenario where this is the area that we would start to look for a spot to buy. So we had drawn what we saw as the previous day's resistance. And Shauna, this is for you. And here's the opening range of the SPY. So we did not actually trade out of this opening range. Now, what I was looking for a little bit more where we would open up here and pull back down to the SPY looking for an opportunity to buy. So we kind of just opened right at the previous day's high and immediately started selling off. So when I had emailed you last night, I had said, sometimes the trades need a little bit of context after the market opens to be able to ask a question in real time. And this really did not trade up high enough here for the context of looking for a pullback to look to bid. Because you can see, like, even within the first 15-minute window, we were right back into that level. So even we really didn't trade past it to come back. Now, there's two situations here that I want to make sure I discuss. Now, in the current environment, getting back to what I said before about how much recent price action history is there for me to determine how soon do I want to get into a trade. If the market was bullish right now, even worst case scenario, if the daily candlesticks were well bid, higher highs, higher lows, closing on their highs and above the 20-period moving average, just built a little argument, right? I would be a little bit more inclined to get a little aggressive, meaning even though this didn't open up here and pull back, the initial trade, I would have been looking to take out the opening range because I want price action to be moving in my favor during this environment. I want to see a little bit more proof that right now it's going higher. If the market had all the bullish scenario argument that I just said, this pullback right here is technically the first bullish U-turn showing the short signs of bullish proof. Now, here's where, again, context of the trade gets in. So this bullish U-turn, which a bullish U-turn means it traded below this candlestick, reversed, closed above that low, and closed above the open. This bullish U-turn would technically now be an entry signal. Now, you can come back and say, well, okay, I buy above that level, right? Well, why in the world would I buy there, despite the fact that it's an entry signal? We have resistance, clear resistance from yesterday's high, and we have today's high. There's no reason in the world to buy there. None. We have two different reasons not to buy. So you can see here clearly that we never traded above the opening range. And even if this was considered a bullish U-turn entry signal, it was not a good entry signal because somebody actually wrote back and said they did buy and it came right back in on them. Okay, so you built your own argument, whatever that argument happens to be. You take your lumps like a professional. You say, okay, that's the cost of doing business. But I hope I just explained to you why it was not a long for both of those reasons. Did not trade outside the opening range to trigger in this scenario. That's a huge part of what I'm saying here. And you would not have bought the bullish U-turn because you had yesterday's resistance and you had today's resistance, both in your way. If we traded up here, so we got through here and closed up here, that would have been an entry because now you have today's opening price to lean on as a stop loss. So I also want to get back into Apple, AAPL. So Apple actually did more of what I explained yesterday, where we actually opened here. We did break out and rally. Now, if you took this as a breakout to the upside, fit the scenario, right? But again, putting the trade in context, how much more room is there to go where the stock basically closed the previous day at 266, and now it's at 282 in the first 45 minutes of the day. What I'm basically saying is you could take this opening range breakout, and let's actually drop down to the 5-minute chart so we can see exactly where that is. So here's the first 5, 10, 15-minute candle. The high here would have been the entry, and you had roughly $4 in profit. Okay, now if you also remember what I've discussed quite a bit on recent trades and trading breakouts, we actually had a breakout and then an inside candle, which is absolutely what you don't want to see. You want to see more of this, well bid, something changed, and look at how clear it is that it went well offered. That's pretty exciting, right? So my point here, especially for everybody who wrote in yesterday, is you want your trades to be repeatable because you have a repeatable system. But what's very important is that you have trade management based on what's probably going to happen next. So obviously you're getting into the trade based on what's probably going to happen next, and your trade targets, meaning how much can I make on this trade and what are the odds of me making that much. And I'm going to come back to the screen in a second and talk about that, have to factor in. So the fact that Apple had already at that point, yes, it broke out of the opening range, and yes, there was profit potential there. So we actually did break out in this scenario, which was a little bit different from the SPY trade. In this case here, yeah, we opened up at exactly that same spot, but we eventually did break out to the upside, which triggered the long. At that point, it was $16 from the previous low. So within that first 45 minutes. Now, I'm not saying it couldn't have gone more. That's not what I'm saying at all. What I'm saying is your trade management would have been tighter and trailing stop would have been tighter because of that distance. And then if you want it to be long again, best case scenario, which I think this is very important, best case scenario is this rallies, holds today's opening price, which would have been that price, right? That would have been the price that we would have been looking for a new entry on the, in this case, just for argument's sake, on the shorter time frame, the 5. And let's zoom over and see what that looked like. So we actually pulled back to the 5, but we did not get an inside candle to trade to the upside. We did not get a swing low. We did not get a bullish U-turn. So we did not buy here again. And what's super cool about this, we didn't even know this was just going to happen. We actually drew this opening price line, and look what happened. We actually break below, rally up, and stop perfectly again at the opening price. And actually, let's extend that a little bit more. Now do you understand why I call the opening price every day? And again, this could be a 5-minute chart. It could be a weekly chart. It could be a daily chart. It doesn't matter. That's what reading the tape means. That's how you eventually become a smarter trader, because you're saying to yourself, what's a significant price I can watch? Is price getting closer to or further away from that? Opening price, opening range, yesterday's high and low, last week's high and low, whatever prices you use, those are the definitive lines in the sand where you say, that's what I'm looking at. That matters to me. And it becomes so much more simpler to trade without all the confusing garbage that clouds your mind and stops you from making a confident decision. All right, so what we're going to do now, I hope that cleared up some questions from yesterday. So let's see, we're on the daily chart. So we want to briefly discuss again whether or not you should be buying today, because the futures, actually, we're going to get into the futures. Let me just pull that up really quick. And I'm going to go to the shorter time frame again. You can see here where we are. This was yesterday. We hit resistance, that resistance at 2880 again, and we pulled back slightly further than 50%. So that's usually my first target, looking at a 50% retracement. So we pulled all the way back 20, just so you understand where we're coming with that. It's basically from where it started to where it ended, and 50% back would, generally speaking, be the area that we've been looking for the next support level if we don't have a clear one based on what we just covered. So let's just say, for argument's sake, we go from 2740 to 2880, which is 140. So 50% of 140 is 70. So we would pull back 70 from 2880. Might have to watch that again. I'll pause that for a second. Doing this for so many years, it just comes in. So it's 50%. So you take here to here, whatever the most recent move was, the most recent significant move, which is 140, cut that in half for a 50% target to look for your next buy, which would roughly be about 2810. And you can see the future stopped right around there, went down a little bit. Now we're hovering right around 2810. So it's actually, despite the fact that the market's down 600 overnight, which I think I can show you here. Where is it? 600 points, right? Despite the fact that we're down 600 points, that's an area that matters to us now. So if we stay above this level, look at your stocks, however they open at that 50% level from where they bottomed out to yesterday afternoon to where they rallied, that 50% level is now also a line in the sand for us to watch. And again, I don't want to feel like I'm always just talking to stock traders. So let me, to day traders, let me pull up a different stock. So we can actually use this one here as an example, because there's actually a deeper lesson here as well. If we use John Deere and we go from 142 to 180, so you got 52, 62, 72, that's 38. half of 38 is 19. So let's just use 20 as an example. So you would take $20 off of 180, which would be roughly 160. And that's right here. So that would have been the area. Actually, it is probably a little bit higher because we just used 20 as an example, but here's a good example. And you could do this on daily charts, 5-minute charts. It doesn't make a difference. Obviously, we just did it on the S&P, right? The E-mini S&Ps. This is the area you'd be looking for this bullish U-turn. And the fact that it happens above that area implies that this previous trend is still strong. So as a general rule, if your stocks bottom out higher than a 50% level, that means that they're still buying in that stock, and the probability of following through is pretty good. So that was actually a pretty good lesson there. It just came out of impromptu. So for looking at for which stocks to trade today, I ran a quick scan, and again, I don't get paid anything for the software, but it's kind of cool. I use the free version. Obviously, I got ads popping up all over the place. So essentially, you know my criteria now: 2 million shares, average true range of $1.50. So what I looked for was which stocks met all the bullish criteria for yesterday, and only 12 came up. So I would just briefly go into those 12 stocks and take a look and see which of these stocks had room to go. So Etsy is actually a good example here. We've been looking at Etsy for a while to finally break through this level, and it hasn't. That's why we keep saying set alerts, set alerts, set alerts. Good example here in PDD that there is nothing to do in this stock. This is one of the stocks that trips. I can't talk. I need my coffee. One of those stocks that trips everybody up, where it meets the criteria, but is not a trade because the stock hasn't moved in 3 months. Now, it's actually good that it hasn't sold off either. So let's take a look. I don't really see any monster opportunities right now. Maybe Campbell's. We'll take a look at that one. JD is actually in one that was in the list. And Walmart, if you know anything about, if you've gone shopping at all recently for cleaning supplies, I'm sure you've seen all of the lines. Excuse me, not the lines, all the empty store. So Walmart staying bullish, changing above the opening price quite a bit. Massive resistance here, so nothing to do unless we get above that level. Excuse me, I'm losing my voice. I got home super late last night. I don't really see any monster buying opportunities right now based on the charts. However, what I will say as a short-term trader, you could now use whatever stocks you're looking at, and I'll just use, I'm going to use a volatile stock as an example. Let's use NVIDIA. Actually, NVIDIA stayed strong, but you can see it's also down $1.30. So we're going to use this price here, which is 246. Again, I'm just using this for illustrative purposes. 246 to 261, so that's 15. So you would take half of that is $7.50. So let's just use 7 off of 261. That would be 254. So right around 254 would be where you'd possibly look for the bottom in a new scenario to look for buy. So you'd look for it to pull back, form a bullish U-turn, or pull back, have a big red candlestick followed by an inside candlestick. So maybe you'd see something like this, a bullish U-turn looking for an opportunity to buy. But you know what? Let's actually use this as an example as well, because let's say all of that does transpire. You have to take it a step further in your trading and say, where is resistance? So if you pull back to 254, you have most of yesterday's resistance and the prior day's resistance that you need to get through. So we got through it yesterday, but we're already pulling back in there. So the better trade actually is if you buy 254, you're inside 2 days worth of price action, which is not good, right? There's nothing new. If you think about it, price action that trades out of the previous day's range, something new is happening. That's the ones you want to be involved with. So the better trade, you could look for the opportunity to reverse here, maybe put on a small piece if you like. If the VIX is trending down, they got more to the argument, right? If the VIX is trending down and maybe the market's breaking out, you put piece 1 on, which maybe is 100 shares, look for it to get back up here, probably pause like it did here for 45 minutes. If it pauses, gets above there, or has a strong volume push through there, then you would look at and see, okay, where is the next level of a potential profit? And we call that room to go. So that's how you should set up your trades for today. I'm actually going to come right back out to the screen. So it is Wednesday, March 11th. Thank you so much. And again, if you have any questions, absolutely, you'll see my email in the description, or you could just leave a comment on the video. I'll be more than happy to get back to you as soon as I can. And if you like the video, definitely subscribe. I'd really appreciate it. So I'm Pete Renzulli. Hope those were some good lessons today and set you up for some how to analyze the market today for some good opportunities. Have a great day, everybody.